lot's changed in the last over the last 30 days. We've kind of turned from where we've been, I guess, there was a lot of optimism to a little bit of fear of, you know, what could possibly happen. And now some reality is kind of striking home. And I guess, what's changed this market?
Well, markets are constantly changing, so I think we tend to get on a train and we think it's straight up or wherever the directions may be. And we had a phenomenal rally through February, March, and we all get caught up in that hype. But of course, when markets move like that, it causes our reactions to also move. So of course, we've made some money. We've seen, especially in the U.S., cattle feeders have had a long stretch of profitability. Guess what they do? They place cattle on feed. And they've placed cattle on feed very aggressively, like we saw in Friday's U.S. cattle on feed report. On top of that, we've had some very dry conditions down in Texas and Mexico that sent more cattle to town. Prices have been good, so why not sell cattle in that environment? And so we've got more cattle on feed than we thought. And this has been going on for several months now. We've talked about it, but now as you step back, we've got a big summer supply ahead of us to get through in the U.S. And the first question is, well, where the heck did all these cattle come from?
Yeah.
So we are very good at pulling cattle on feed when the environment is right. We've dipped into this feeder pool that was smaller. I don't think anybody's going to say the pool wasn't smaller. We've dipped into it further and pulled more light cattle on feed than I think we would have typically done for this time of year. You could then argue that these are cattle that normally wouldn't have been placed till later on, but they're on feed.
So later on would be?
Later on this year.
Okay.
So the fact of the matter is the cattle are on feed, the supply is there, we got to get through this beef.
And it's a lot of beef.
It's a lot of beef.
So what placements are up, what, 10%?
10% in April over last year, and it was well above the expectation, even going into the report, and of course the biggest April placement we've ever had. So it's big, and again, it's not just 1 month. We've been doing this, the placements over the last 12 of the last 14 months have been bigger than a year ago. So this is it's a building supply. And we'll get through it, but we, of course, remember in February and March, we had record retail prices, sent prices higher at the counter, kill levels backed off. All those things have to change now. We've got to see packers increase their kills. We've got to get through these cattle. Prices have to drop at the counter, and they will. All those things will happen, but it means lower prices back to producers.
So, and this is one of those things where we, like you said, we've seen it. We've sort of known about it. We've seen it coming, and now reality has really struck. So, is Canada, obviously the Canadian market is linked to the U.S., but are we in that bad of a situation too here? Because our placements haven't been really strong.
No, and again, I think first of all, we had a much bigger sell-off of the cow herd on a percentage perspective than the U.S. over the last 5 years. So we are down more in supply. I think our numbers are smaller in sheer actual supply, but at the same time, prices are tied together. The one difference is that number we talk about basis. And so our basis relationship, our spread between Canadian and U.S. prices are narrower than they have been historically, or what we would have seen a year ago, or the 5-year average. So our prices vis-a-vis the U.S. are better than normal, but we're still going to trend lower with the U.S.
Why is the basis so tight?
I think it goes back to supply, Sean. I think, again, talking about the smaller supply here that we've had, we've got cattle on feed numbers below a year ago. So remember, U.S. is above a year ago, 7.4% on the May 1 report. We're actually 3% below a year ago on the Western Canadian feedlot inventory numbers from May 1, according to CanFax. So it's a different scenario. We've got smaller supplies. Bottom line is we still got to sell the beef. We've got to get through the beef. Canadian packers have got to still kill the cattle.
So we've got a large number of cattle on feed in the U.S. We also have something else happening on the other side, which is a lot of discussion about a really scary looking corn market if you're a cattle feeder or a hog producer. There's a lot of discussion out there about, $8 to not even $9 corn. That really provides a very, very scary outlook right now for the feeder.
Well, exactly. And again, depending on when you bought inventory and if you were covering off and hedging cattle and corn at the same time, you're going to be in a different scenario than standing facing cash spot corn or cash cattle, dead in the face today. Two very different scenarios. So, but if you're just walking into it fresh today, putting a new pen of cattle on feed and going out and having to deal with the current corn situation or the uncertainties or the volatility, I guess is a better word, you've got lots of concern. And one of the things that happens over the next 4 to 5 weeks is we're going to see break-evens in the U.S. start to march higher, probably about $10 a hundred higher than they are today. And by the time we get out there, so that's going to put us out till into late June, first part of July, we're going to have break-evens that are above where prices are. So you are going to be paying more to put a pound of gain on a steer than what the value of that steer is worth. And so in that environment, you tend to see cattle feeders just kind of give up the ghost and say, get these cattle out of here. They're costing me more money than I'm making. So that historically has been kind of a key critical turning point for how marketing's react, and you almost get a bit of a dumping happening.
Well, based on how, we had a situation here in 2010 where U.S. feeders made money every month of the year. Canadian feeders have made some money. And so everybody got extremely happy and extremely bullish and, like you said, started placing cattle. So really, should we be surprised that we're in this situation?
This is a perfect market reaction. Prices move up and we respond to it. Again, like I say, there has been ample opportunities to do some very aggressive risk management and to take care. And I think that's one of the biggest changes in the marketplace that we could talk about is how much volatility happens on a day-to-day, week-to-week basis, whether we're talking about corn or whether we're talking about cattle or whether we're talking about a Canadian dollar. So those that have, I think, tried to manage that a little better are going to weather this storm. But just to walk into inventory and just assume that the markets are going to go straight up, but is pretty false, I would think, and it always has been. So that's not new.
So U.S. cattle trading under $1 reality then?
Oh wow! Well, we traded Texas at 104 yesterday, so it's not far. I don't think a person could say never. I don't want to be the first guy to call it, but we're not far from that today.
Mm-hmm. So basically, is this a long summer sort of gloomy, or is this a potential snap downward and work our way back?
Well, just looking at how we place the cattle and what we've got out there in the U.S. for now, right clear through October, versus last year's supply, we've got plenty of beef. So it just doesn't feel like the market has already come off a lot. Don't forget we topped at 123, and I just told you we traded yesterday at 104. So this market has already adjusted big time. Do we have another change like that coming? No. So the biggest down is in the market. Where to from here? It feels more sideways than anything. I think it's a grinded out kind of summer where maybe not much happens. We've brought it down. Now we trade sideways for quite some time before we can get out of the other end of this.
Well, for those guys that traded and shorted the market 123, congratulations. And for the rest of us, good. Hopefully, we're going to need some better luck.
Yeah.
So.
Well, and I think the key point here is we're going to have to get out and eat some beef, and we need to see some featuring of beef. Get this product moving. There's only one way to get out of this, and it's to move products.
So how much potentially could we see a price drop at the grocery store level?
Well, I think it's going to come back to the levels before we rallied it up in February, March. Those were record price levels at the counter. Sounded good to say, but it's had some negative impacts today because consumers didn't buy at those prices.
Okay, Ann, thanks a lot. We'll talk to you again in 2 weeks.
Okay, good shot.